Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer. So thankful you clicked and gave us a few minutes of your time. We've got a couple of topics to talk to you about this week. We're going to go over the tariffs, one of the major topics so far for 2025, and kind of dig into the details there a little bit, but from a different angle. And then Andrew will take a look at 2024 versus 2025 and some differences between those years so far. So as far as the tariffs, as you guys know, I think we record this early in the week. And then by Thursday, by the time you view it, a lot of times things have changed. So between now and Thursday, we are expected to have more clarity on exactly what the slate of tariffs will be, whether they will be more targeted or they will be more broad. And Wednesday is expected to be the date to get more clarity on that. And then perhaps maybe most importantly, what the end goal actually is, whether it is to get a leveler playing field and to get what would ultimately be the world to more free trade. A lot of the world, I believe, as you know, this time do have higher tariff rates than we do here in the United States. So, perhaps the end goal here is ultimately to have and create a world that is freer of trade, or perhaps it's one to have one that is more protective of U.S. manufacturing and trying to create a more industrialization or reindustrialization in the United States. So more clarity on what that end goal may be the most important as all. But here we got today is a look at by state. So this first slide is going to show you export partners by state. So where do the finished goods from the United States go to? And as you can see here, we've got differences among the states. The largest for most states by far is the blue. That would be to Canada, including here in Indiana where we're recording it. Florida is a little bit of a unique nature here with their largest export partner being Brazil. A lot of agricultural trade there with South America, and then of course Mexico for a lot of the southern states. That's the export side. On the import side, it will look similar in that the blue is the largest share for most of the northern states there, but particularly in the Great Plains there all the way down into Oklahoma. And the reason for that, the biggest source by far, is Canadian oil. Our refineries here, which take a long time to develop, get regulatory approval, are set up to refine that heavier grade Canadian oil. So even though since the time we built a lot of those refineries, we have boomed our own production, our refinery capacity is still set up for that Canadian oil, and that is unlikely to change anytime in the near future. And the yellow states there at the bottom there is, again, Mexico, being the largest import. As of note there, you can look at Indiana, Ireland, notably as our largest import partner, which may raise an eyebrow for many of you. The reason for that would be the intellectual property rights that Eli Lilly has domiciled in Ireland, and therefore they technically import a lot of that intellectual property with those pharmaceuticals. So that explains the Ireland. So that's the tariff side. I'll pass it over to Andrew for some market details.
All right, thank you, Adam. So we've had a big change in how the markets are performing for 2025 as we begin to close out the first quarter compared to what we saw in 2024. So if we're able to kind of zoom in on this chart, there's a lot going on here. And so what we can see is some of the best performing assets in 2024 were what we talked a lot about, the Mag 7. That top panel on that chart there, I know it's a little bit hard to see, is the Magnificent 7. They were up as a whole 66%, according to one ETF that tracks those. And the second best performing, we looked at some of the factors. We saw growth stocks did very well, up 37%. And then, of course, we had the S&P up 24. And then some of the worst performers last year, we start looking at value stocks. We look at international markets, which have been struggling for several years, coming in just at a handful of percent up for the last year. Now we turn the clock to 2025 and we see the kind of a complete reversal there. Some of the best performing assets have been international markets, emerging markets. Meanwhile, those Magnificent 7 switched. Now they're down actually year to date 15%. And then growth stocks, that were up 37% last year, down almost 9% in 2025. And so we really see this is why we often talk about the need for active management, the need for rotation, and look for what parts of the market are showing strength versus weakness, and how just because some type of strategy or some type of factor worked really well in the past, that doesn't also often always carry over into the next several months. And we always want to be evaluating and looking for different opportunities, and something that we have actively been doing at FEG, looking for where we can see strength and where we see some of the largest risks in the market. And so as we close out this first quarter, we thought it was a really interesting and important fact to look at, to see that what performed well last year, sometimes we do see that momentum carry forward, but we always want to be on the lookout for rotation and look for opportunities outside of just simply what led us into the new year.
Or if I could put it another way, I would say this would be a little bit different than what we've seen in the NCAA tournament so far. There we see the 4 number 1 seeds, your Dukes and your Houstons and Florida, advancing to the Final Four versus we got some newcomers into the market, which is a little refreshing in many regards. So that aside, we sure appreciate your time. As always, if we can be a help, please don't hesitate to reach out, 800-928-4001, or scan the QR code and do it electronically. Thanks. Have a great weekend.